A billionaire just made a massive move into physical gold, and what does this signal for the markets? Russia launches gold trading on St. Petersburg Exchange coming this December, which is a direct challenge to the West. And non-Western nations are stockpiling gold like never before, reshaping of the global financial order, and also what's been going on with the 30% tariffs for Mexico and the 90-day delay that is actually in place right now and how that can impact your gold and silver stacking strategies. Hello, everyone. My name is Rick Fronek. I'm the CEO of Silver and Gold Solutions here in Galena, Illinois, and we're going to jump right into today's hot topics here. So this is something that uh, I'm going to share with you one video with two clips from it that's very important that kind of shows you a signal of what's happening here with one person in particular who is a billionaire who did make a huge purchase in gold, which is definitely is a signal and a sign of what's to come. Okay, so this is something where real quick we're going to share with you silver and gold. What's the best time to buy? I've been saying this for a couple of weeks now since we started, but I'm also going to share information on that. Also, the driving forces behind what's happening in the gold markets and why you've seen such a big drop in gold over the past week, where it did actually hit its a high all-time high previously, and then also. The gold and silver availability, okay, and what's been happening across the globe as far as which countries are doing what. And then also, I'm going to have a giveaway as our part of our weekly giveaway. And then also, I'm going to share with you real time what I can do and what you can do moving forward. So this is something that's good. We've got a really great presentation today. So let's dive into it. And if anybody wants to do like, if you don't want to watch the video from last week, I highly encourage you to do so. But I also do have an overview of last week's Stacking Saturdays on our WorkSmarterForYourFuture.com blog post. Okay, so if you want to check that out, you can as well. Okay, so what I want to do real quick here is just go over the gold silver ratio. So since we've been doing the gold and silver stacking Saturdays, I've been keeping a log on. These are some of the dates here of what gold and silver has been doing. So what you want to do is, we're looking for consistency. Whereas, gold and silver is going to fluctuate anyways. But as you see here, even going back to back into June, gold was at 33.69. It did spike up last week based on the information about potential tariffs on 1 ounce and 100-ounce bars being imported into the United States. So it did spike up, and earlier on that day, uh, on August 8th, it actually eclipsed 3,500 on the futures trading market, okay, for December. So that's something that to kind of keep in mind there. And then also with silver, it's been consistent too. It was back at $36.02 an ounce back in June. And it actually, went up to actually at one point it did hit $39. But in this case here, you see the consistency, 38.45, 38.19, 37.10. And then last week it was at 38.41, which was actually kind of coincided with what happened with um, the information on the possible gold tariff. It did affect the price of silver, so that went up there. And then, of course, now this week it has dropped down to 33.36 on gold and 38.02 on silver. Okay, so what I always like to share is the gold silver ratio because it's an important aspect to keep in mind of where we are headed for the gold and silver market. Okay, so right now with it gold at 33.36 and silver at 38.02, it takes 87.76 ounces of silver to equal 1 ounce of gold. And that's the one thing that I've been kind of preaching and talking about here over the last couple of years is the gold to silver ratio and the importance of that because typically it ranges in the 40 to 60 ounces per gold range. So like if you had like 1 ounce of gold, you would need to have 40 to 60 ounces of silver to equal that 1 ounce of gold. Now, if you go back over the course of the averages of the years, and even at one point it was at a 15-to-1 ratio on the low end, that means that silver was basically caught up to gold. But like in this case here, it still is going to get into that range. So what that means is that the price of silver is going to be gaining in order to catch up to gold. So it's kind of something to kind of keep in mind too, because like gold always spikes first, and we did see that huge spike earlier this year. But what's been nice with the gold market is that it hasn't had a significant drop. It just stayed in that 32 to 3,500 range, kind of bouncing up and down. So usually when that happens, and one of the impacts of that also is the summer months. That's also one thing that a lot of people wonder, well, okay, we saw that big spike in gold. Why is it kind of bouncing around and not really doing much right now. Well, that's part of the reason is because it's the summertime. So everybody's, the focus isn't necessarily on purchasing and doing things with gold. And so a lot of times during the summer months, there is this kind of like tapering off period where it just stays steady. It does have its spikes here and there, but depending on what's been happening, sometimes what happens with here in the United States is whether they're going to drop the interest rates or something that the Fed says or whatever. In this case here, like last week, we saw with the gold tariff rumor that really affected the price of gold. But also at the same time, you see silver's actually outperformed gold this year because of the increase in the price of silver over the course of this year. So that's something to kind of keep in mind is that gold is staying consistent and silver is staying consistent where they're not dropping down. The odds of, in my opinion, the odds of gold will probably never drop below 3,100 again. In silver, I do not see with everything that I've been watching, the people that I've been following, and the information that I have, I don't see gold ever getting below $34 again. And right now, especially with the fall coming into play, and usually typically towards the end of the year in November and December, the price of gold and silver are impacted by the time of year as well. Okay, so this is something to kind of keep in mind. So right now, this is currently a very good time to save in the form of silver and gold. So this is something you're not too late if you haven't started yet. So this is like I try to share this information just to give you an idea of what you can do. So let's dive into this goes back to what I talked about last week, okay? Where the price of on August 8th, the price, because of the tariff rumors, the price of gold spiked. But then after the weekend, the Trump administration confirmed that gold bullion imports into the United States would not be hit with the tariffs. And as a result of the administration's response this past Monday, gold fell 1.62% and spot silver dropped 1.86%. So that shows you the big difference of what I just showed you in the previous charts. And then last week, I also, whoops, not that one. Okay. I did share a clip this last week from Andy Scheckman exposes extremely bizarre silver news. Now, he was talking about, in this video here, he was talking about gold and silver. And actually, this does say this silver news about the predictions moving forward, where, he was talking at, one point about silver hitting $70 an ounce, but also the fact of the people that were actually taking physical delivery of gold, which is in a lot of times with the markets and that with whether people are trading, they're actually not trading physical gold. In this case here, they're just trading, ETFs, the paper version of it, so to speak. But in this case here, he's saying at the beginning of this month, instead of it just being like 1% of these bigger entities, whether they're banks or individuals taking delivery, it was the first 3 days of August, it was 100% of everybody that was finalizing their trades and that they actually wanted physical delivery of the gold and silver that they had. So this is something that kind of leads into my next section here. Pardon me. This is all live, so my apologies for any errors. If you see anything or hear anything, that's because this is all live. I'm not editing this afterwards. So I wanted to share two portions of this video because it coincides with everything that I've been talking about and sharing with people over the last couple of weeks. Now, this is something from this is on YouTube, and I'll have the link below the video if you want to watch the whole thing. But there's two clips in this video that I want to share that do make a big impact. Okay, so this is something that part of the description here, part of the commercial. All right, so
largest investors taken this position of 318 million US dollars in gold.
Okay. All right. So here's this is a summary of what is just transpired in the first 6 minutes. Okay.
They've got a huge capture. When you see one of the world's largest investors suddenly take a position of $318 million in gold, you have to ask yourself, what does he know that the rest of the market is either ignoring or too polite to say out loud? Ray Dalio didn't get to running Bridgewater, the largest hedge fund on the planet, by accident. And when he quietly parks nearly $1/3 of a billion in a monetary metal that earns no yield, you can be certain it's not because he's bored of equities and fancies some shiny paperweights. There are only two real explanations for a move like that. Either Dalio sees a trend unfolding, perhaps a technical breakout, maybe a commodity supercycle in its early stages, and he's simply following the momentum. Or far more interestingly, he sees the same macro dangers I've been warning about for years and is positioning himself accordingly. In that case, he's behaving much like a central bank, and not just any central bank, but the kind we find in the East these days. Those who are methodically swapping paper reserves for tangible, unencumbered gold. If you think about it, it's a clever parallel. Central banks, especially outside the Western Alliance, have been quietly but steadily reducing their exposure to the dollar, euro, and other fiat currencies. They've seen the writing on the wall. Debt levels are unsustainable, deficits are ballooning, and the political will to fix any of it has gone missing. Dalio, for all his billionaire mystique, faces the same question as a reserve manager in Beijing or Moscow: how to preserve purchasing power when the currency game is rigged against you. Now, Dalio's fund isn't going to take delivery of 400-ounce bars and stack them in a Connecticut basement. Physical gold isn't a regulated investment in the same way equities, bonds, or ETFs are. His clients, sovereign wealth funds, pension funds, and institutions with armies of compliance officers, would blanch at the idea of their capital being converted into unallocated bullion outside the formal banking system. So he buys GLD or similar instruments. They're easy to book, easy to trade, and satisfy the regulatory gods. But here's the part I find telling. Dalio personally holds physical gold, and that, to my mind, is the more important clue. It tells me he understands the distinction between a claim on gold and the metal itself. In the end, it's the difference between holding a concert ticket and being in the front row. The logic is spreading from the top down. When a $20 billion hedge fund manager thinks like a central banker in Asia, rather than a Wall Street quant, you can bet others in the investment management industry will begin to follow. And the inflection point will come when bond yields start to rise meaningfully. Because when that happens, every investor's arithmetic changes. The old assumptions that you can hold paper for yield and safety collapse. In fact, we can already see the outlines of this shift in the metals market. Look at the top performing commodities year to date, and you'll notice something curious. Strip out the softs like coffee and cocoa for a moment and focus on metals. The best performers aren't just gold and silver, but so-called non-monetary metals. Platinum, palladium, copper. I lump those into the
Okay, so this kind of substantiates kind of what Andy Sheckman was sharing in the one video. Now, he was talking about just the beginning of this, the beginning of August, but Ray Dalio did make this move in the first quarter of this year. So this is something where you have this billionaire who, you know, obviously. If you've never heard of Ray Dalio, I'd go ahead and do a search on him. He is one of the top 200 billionaires in the world, and when he makes an actual purchase where he's actually taking physical gold, that is a huge sign. Okay, he's nobody's going to drop over a quarter billion dollar or a quarter of $1 billion into gold without a reason. Okay, so this is one of the things that where the average everyday person and what the mainstream media is not going to tell you is this stuff that's happening behind the scenes. Okay, they're not going to just say, you might be able to dig it up somewhere doing searches online, but in this case here, this is not something where somebody's going to say, knock on your door and say, oh, by the way, now's the time to buy gold because tomorrow it's gonna shoot up, $1,000 an ounce or something like that. I'm not saying that that's going to happen, but I'm just trying to give you an example why, getting this little insider information here and there is going to help you make a decision for yourself and your family and your future. Okay, so what I want to do also here is there's another clip on here. So that guy that is talking, that is uh, uh, pretty much an AI thing summarizing what Alexander McLeod just was saying in the earlier part of this video. So because he talks with an accent and everything, so the AI voice is actually just summarizing um, what he's talking about. But there's another part in this video that I want to share, which has got some real good information as far as what's coming up or what other countries are doing. Okay, so this is definitely going to make an impact on how, it should make an impact on your outlook as for your opinion or what your decisions are going to be in the form of gold or silver. Sorry about the commercial. So,
Seeing distrust in fiat, broad commodity revaluation, BRICS countries pushing non-dollar trade, the setup for silver becomes explosive. And that brings us back to the broader metals complex. In my Substack piece, I highlighted how a basket of base metals, priced in gold, now trades at just 23% of its value in 1900. That's not a typo. For over a century, the relative price has collapsed, not because these metals are suddenly useless, but because paper currency regimes have distorted the pricing mechanism. If that ratio simply normalizes, you're looking at a fourfold increase in base metals value relative to gold. And if gold itself is climbing against paper currencies, the nominal price move in dollars, euros, or yen could be staggering. You might be thinking, but what if the West's economy tanks? Won't that crush demand for metals? That's where the bifurcation comes in. Our economies, US, UK, Eurozone, may well stagnate or contract. But the BRICS Plus bloc, the Shanghai Cooperation Organization, and much of the global south are still in build-out mode. Infrastructure, energy grids, manufacturing capacity, all of it needs copper, nickel, aluminum, steel, and they're increasingly trading those materials outside the dollar system.
Around here, it's not a patio.
I hate this part. Sorry about that. So I'm going to comment about this in a minute, not the commercial here.
Designed to bypass SWIFT is advancing. Russia's Moscow Exchange has launched yuan-denominated gold contracts. The Shanghai Gold Exchange continues to grow as a physical delivery hub. India is experimenting with rupee settlements for oil imports. These aren't isolated experiments. They're components of an emerging parallel financial system where gold plays a central role as a trust anchor. In such a system, the price discovery for metals will gradually migrate away from London and New York. When that happens, the Western paper market's ability to suppress prices, whether through concentrated short positions, opaque lease agreements, or synthetic ETFs, will erode. Price will be set where physical is exchanged, not where contracts are rolled over. And that shift will be felt most sharply in metals like silver, where above-ground inventories are already thin. Let me put it plainly. The era of artificially cheap metals is ending. The market is starting to reprice real things. Things you can't print, can't conjure with a keystroke. The fuel for that repricing is twofold: the declining purchasing power of fiat currencies and the relentless physical demand from a rising economic bloc outside Western control. Now, what does this mean for the ordinary investor? First, you need to think in terms of real value, not nominal prices. If silver doubles in dollar terms, but the dollar's purchasing power halves, you've preserved your wealth. You haven't doubled it. The point of owning monetary metals is to maintain purchasing power through currency debasement. Anything beyond that is a bonus. Second, understand liquidity. In gold, the market is deep and liquid almost everywhere. In silver, physical liquidity can evaporate quickly in times of stress. If you want to own it in a form you can actually get your hands on. Coins, bars, allocated accounts with reputable vaulting. Paper proxies like SLV or futures have their uses for trading, but they are not substitutes for the metal itself. Third, and perhaps most importantly, don't get caught in the trap of thinking this is a West-only story. The center of gravity in metals demand is shifting eastward. Your framework needs to account for decisions being made in Beijing, Delhi, and Moscow just as much as in Washington or Brussels. A Chinese solar manufacturer deciding to ramp production is as relevant to silver's price as a Fed interest rate decision, arguably more so over the long term.
Okay. So
remember, Mark.
So this is something that I wanted to share with everybody. This is, he makes the comment about, what's happening with these other countries. Actually, all right, let's get off of that. He makes a comment about what's happening with these other countries. between Russia, China, India, everybody is moving away from the US dollar. Okay. And that's something that where right now all the markets for gold and silver are pretty much controlled by the United States, the UK and the London British stock market. Okay, so this is something where the prices are controlled by Western countries, but because of what happened going back to 2022 with the official outbreak of the Russia-Ukraine war, that's when the U.S. put sanctions on Russia, and that's when all these other countries it raised the red flag that they need to do something, and so the United States does not have a control over their finances, which is kind of what happened. In all actually, I did share this in another video because of uh, President Biden putting sanctions on Russia. He actually benefited them. I mean, it hurt them initially, but over the long haul, Russia started putting their money into gold, and gold has raised over the course of the last 2 years, 2+ years, and so. Russia's actually more wealthy now than they were before Biden put the sanctions on them. So it kind of backfired in the long run. But anyways, we won't go down that road. But anyways, so this is something to kind of keep in mind. So, and he's talking about liquidity of gold and silver. Now, this is something that I said I'm going to share with you what I can do today and what you can do today. But it's also something where you want to be able to physically be able to have your hands on gold and silver. Okay, if you're trading with ETFs and that, okay, that's one thing. But don't you're not going to be like one of these central banks or somebody or one of these big entities that are say I want to take actual physical delivery of that silver and gold, because if everybody did that in the world, there's not enough gold and silver to go around for all these ETFs and everything that's floating around out there. Okay, so kind of touching back onto what he was saying here. Now, this is an article that I found that actually from zerohedge.com news. Russia to launch domestic gold market at SPYMEX challenging London benchmark. Uh, Russia, the world's second largest gold producer, will begin trading physical gold on the St. Petersburg International Mercantile Exchange by year end in a strategic move to establish domestic price benchmarks and reduce reliance on the London's LBMA bullion benchmark. Um, so this is something that, that it goes on to say that, in 2023, they did this too for the oil and gas initiatives. Okay. So that's something that I'll have a link for this article below. So if you want to read it all directly, you can there. Um, but Russia's move also has geopolitical implications. By using SPYMEX, the country is building an alternative to Western clearinghouses, which in recent years have demonstrated a willingness to freeze sovereign assets, which it goes back to the sanctions put on Russia. Unlike the UK and US, which house substantial foreign gold but often restrict its movement, Russia stores its reserves domestically. So, and then the article goes on to say here, central banks are increasingly bypassing international markets to purchase domestically mined gold in local currencies, a move that supports local economies, reduces costs, and protects foreign reserves. According to the World Gold Council, 19 out of 36 surveyed central banks are now sourcing gold directly from small-scale or artisanal domestic producers, up from 14 last year. And an additional 4 banks are actively considering the approach. Um, so this is something that which is referred to in the video that I just shared with you. The St. Petersburg Gold Venue will complement the Moscow Exchange's existing physical bullion platform and may eventually become a conduit for BRICS nations seeking non-Western precious metals markets. So this is all something that with the BRICS nations, I've done videos on that before as well. It's something I encourage people to look into that and understand what's going on with that. So it's not just everything that you hear from the news here in the United States. Okay. So that's where, like in the video, he made the example of, a Chinese solar manufacturer having a sudden huge demand on silver which would make an increase in the price. It has just as much impact, if not more, than the Fed reducing rates or increasing rates or whatever to, help try to bolster the economy. So that's there's more entities out there that impact things other than what we hear in the mainstream media here, especially in the United States. And then I want to close this part out with the European Central Bank recently noted that gold has surpassed the euro as the second most traded financial commodity after the US dollar. a development that underscores the global revaluation of gold's monetary role. Now, I've talked about that before, and I do have to, I keep talking. I will try and do my best to get as much information as I can for next week's presentation to talk about the revaluation of gold and how that could impact everybody across the entire world, who actually, whether you have gold or not, it's going to make an impact. Okay, so I did just wanted to show this chart again, just as what I've shared before. The World Central Bank's gold purchases going back to going back to 2010. So you see how it was pretty low, almost non-existent here at the beginning of 2020. But then you see the key date with the war here in 2022. That's when everything started spiking and going up. Okay, and this is 2025, the most recent, the first and second quarter here. Okay, so now to kind of close things up with the 30% tariff, this is something that I did dive a little bit deeper, and I did find this this is one thing that kind of spiked a little bit of the increase in silver, but because you've seen kind of silver staying a little bit steady now over the last couple of weeks. On August 1st, there was supposed to be a 30% tariff on imports from Mexico and the European Union. Well, I did find this article that on August 7th, you haven't heard much about this in the news because on August 7th there was a 90-day suspension of the 30% tariffs. Okay, so this I'll have this link below as well as so if you wanted to read it directly, you can. So they did reach this. There's a 90-day kind of like it's put on the back burner. They're still in negotiations, so that's why if you take 90 days from, okay, they're saying July 31st. So between August, September, between now and the end of October, silver will probably stay in this kind of pretty much steady pattern. But depending on what happens with this or what agreements are made, this is something that, silver, once it hits that $40 mark, it's going to take off. That's all the people that I've been listening to have been saying the same thing. But it's one of those things where kind of keep this in mind that there's this 90-day pause on this tariff. And, obviously when, it gets settled or the agreements are settled, then, the markets will adjust accordingly. But in this case here, it is something that's kind of what's happening where you can kind of keep this in mind. Everything that I'm sharing here is I'm just trying to give you insight as to what can impact the gold and silver markets. So you're not spending, thousands, I should say thousands, but hour after hour after hour online watching different videos, trying to get the important aspects of it, because a lot of stuff on there right now on the internet is repeat stuff. I've noticed even a lot of people that I follow, they're having a lot of the material regurgitated into like 5 different clips throughout the week. And basically it's just a matter of they're just doing that to get the views and the time and to get paid for it, which, okay, that's their priority. That's fine. But I would rather kind of condense things down and give it to everybody here and, I'll, one short week. Okay. So in this case here, what I do is I do want to have a quick drawing here, and we've got Mark, Joe, Tammy, Steve. Hi, Steve. That's just the same Steve that won a couple of weeks ago. And Tim on here. All right. So what I'm going to do is this is people that are on here live right now. So I'm going to go ahead and at this specific moment in the video, like I said, in order to win this week's prize again is going to be the 1 gram gold bar. So we're going to go ahead and put everybody's name here in a box on the cup. And so all you have to do is register and be on the live call in order to win one of our weekly prizes. And next week, I'm going to be giving away a membership. Okay. And that actually has a $200+ value. And it's something that's, I highly recommend you be on next week's call. Okay. So today's winner is Mark. Congratulations, Mark. Go ahead and send me an email at rick@silvergoldsolutions.org, and I will send me your email address. Send me an email. Give me your address and your phone number, and I will reach out to you directly. I'll probably text you, and then if you want to jump on a phone call, or I just want to make sure I have the correct information to get this shipped out and mailed to you on Monday. Okay, so congratulations. So what I want to share real quick is, if you have not seen my Wealth Strategies for Beginners video, go ahead and it's on this channel. Go ahead and search for that and watch that. And then if you have any questions, it gives it's like an 8-9 minute video that gives an overview on the power of precious metals, and also one of the companies that I highly encourage people to look into, which is a company called 7K. And so I'm going to share with you here, real quick. Um, with the bonus, if you do decide to create a membership with 7K, this is what I would be sending you from myself, a Silver and Gold Solutions coffee mug, the 1 ounce Indian Buffalo Head silver coin, and then a 1 ounce copper coin. Now, that's one thing that I did want to mention real quick again, too, is that copper is one of those metals. Like there's a high demand for it, but because it isn't a high dollar item, as far as, like per ounce. Um, a lot of you don't hear about it in the media a lot. Okay, but that's something that's used in any it's like silver. It's used in almost anything electronic. Pretty much has copper in it. Okay, same with silver. So it's something that there is this demand. There's always going to be a demand for it. But that is one of the items that is on the tariff list is copper or even scrap copper is stuff that's on different tariff lists for different countries. Okay, so kind of keep that in mind too as well. But that would be the bonus gift from me to you just for creating your membership with 7K. And I'll have a link for more information on 7K below the video as well. Okay, so if you go through that link, I would send this from me to you. So that's right now you're looking at that's like a $65 value. Okay, so 7K is available in these 41 countries. Okay, and so what I'm going to share with you right now is what I can do today. Okay, so let me stop this share. And this is something that uh this is something let me pause this once. I'll stop the share. Okay. Uh Bear with me 1 second here. Like I said, oh, there we go. Hang on. Escape. There we go. All right. Okay, so this is my 7K back office. Now, this is something that if you do have an account, this is what you can do the exact, at any time of the day. Okay, close that. All right. So this is like I said, this is where you can buy gold or silver in incremental amounts as little as $1 at a time or as much as you want. Okay. So in this case here, this is an account I use just to share for examples on videos. Okay. So it shows you the exact price of gold at the close of business yesterday. So it's 33.36. Silver's at 38.02. Okay. So I'm going to buy assets. And this is how easy it is to do. And this is something that if you do have um, a sound money wallet, which is this is exclusive to 7K. They do have a trademark on it. This is something that no other company in the world and none of the there's other gold companies out there that are trying to replicate something like this, but they do not have it. This is the only company that allow you to buy gold and silver in as little as $1 at a time. They'll store that amount for you. And if you ever wanted to convert it back to fiat currency and back into your bank account, you can do that with a click of a mouse as well. So it's something that no other company is doing that. So let's do US Silver Eagle. So the buy price is actually 47.02, and then we'll do $10. So in this case here, because of the processing fee, because I'm using a card, it's going to be 30 cents. And let's do this, do that, complete purchase. And let's see, submitting, order received. Okay, so what it shows you, okay, it goes to your Sound Money. It went to my Sound Money wallet, and it's got an order. It tracks it. You can download your receipt. It'll actually show you where, what percentage of silver you bought. So like in this case here, let's go back here. Whoops, I don't want that. All right. So I just added $10 to my Wealth Builder account. So in this case here, if I ever wanted to take that money and like say if I had a bill that came up and I needed, I don't know, like whatever, $200 or whatever for this bill, I could go ahead and convert the gold, the silver or gold that I have in this account back to fiat currency and back to my bank account, all within a couple of clicks of your mouse. So it is something that no other company has that ability to do that. Okay, so this is something that's very unique to 7K. So what I'm going to do here is we're going to go ahead and wrap this up. But just kind of keep in mind what I shared today. Okay, with Ray Dalio making that such a huge purchase, okay, he's a billionaire. People are like, well, he could probably afford to lose it. No, he's not doing it to lose money. There's people that are on the inside that know more about what's going on than what the mainstream media is sharing with people. Okay, so if somebody of his stature is purchasing that much physical gold, there's something happening that's going to be happening soon. Okay, and whether it has to do with um, the BRICS nations, or whether it has to do with, gold, the revaluation of gold, which in my opinion is probably the most likely thing that's driving force behind some of these people doing these types of things. But if they do revalue the gold that all these central banks are storing, it's instead of it being the $42.22 ounce as which they have it on the books as, and they do revalue it at the, say, even the current price today, the 33, we'll just do $3,300 an ounce. Anybody who has that money in gold, it's going to, instantaneously, it's going to, you're going to have a huge gain. You're going to be, if you're not a millionaire or billionaire, then you're going to be working your way towards it. So, but the thing is too, is just to keep in mind whether you can do a little bit at a time with silver and gold. That's why I highly recommend 7K, because they have that ability to where I can, yeah, I can take physical delivery of the stuff I have in my wallet. So if I wanted them to send me 3 or 4 1 ounce American silver eagles, I could do that. Okay, I just send it, I just liquidate, or, I send them a message, say, okay, I want to convert this to physical silver. They pull it from their vault and ship it to me. Okay, so that's something where they can store it for you. And that's part of the, people say, well, why is there a membership fee? Well, they're doing all this stuff and they have this technology and everything so that you can easily and affordably save in the form of silver and gold. So that's, with their membership, a lot of, part of the cost is the storage fee. Okay, the vault storage. Whereas if I've done videos on this in the past, but if you check out other companies, what 7K charges for their membership is less than what these other companies charge you in a year just for storage. Okay, so it's something that there's some huge benefits to it. Plus, with 7K, they do have, instant gold pay with your account. So you could either get $20 of gold instantly in your account when you create your membership for a basic, or 40 if you go with the premium membership that goes into your account automatically into your Sound Money wallet to help you get started. So I hope everybody got some great insight from this. I'll reach out to me at rick@silverandgoldsolutions.org if you have any questions. I'm trying to keep this as short as possible. Hopefully you got some great value from this presentation today. And I look forward to seeing you on next week's call. And next week, we are having a special here in Galena, Illinois, so I do have a huge event happening starting next Saturday. It's going to be basically between now and Labor Day. There's going to be some really great specials for people. If you're ever in the area, just feel free to look up Work Smarter for You and Silver and Gold Solutions. And I look forward to seeing everybody next week. Have a great week, everybody. Thank you. Take care.